Check, check, mic check. Check, check, mic check. All right, looks like this is working. Awesome. All right, good evening, everyone. Kirk, good to see you, brother. How you doing? Hope everything's going well. Awesome. I'm drinking a little bit of water today. Cool. So let's go ahead and get started today. Today was a tough one. So I definitely ended up blowing an account, but it was one of the accounts that was like really on I had from a long time ago, which was really low, and ultimately it ended up blowing because of silly decisions on my part. So that account has been deactivated. So that's the news for me today. I'm instead of 19 accounts, I'm down to 18 performance accounts. So good thing is I have 5 evaluation accounts that are waiting to turn into performance accounts. So I'll bring one on from standby and I'll get back to 19 as quickly as possible, but just wanted to be transparent with everyone here. That is something that has happened and I'm not proud of it and it hurts. Kind of sucks, but yeah, Kirk, that's tough. That's really tough. So that's okay. I mean, that's why we take a look at the charts today and we'll see what we could did wrong and see where we could have found better plays. So let's head to the charts. So okay, so we know tomorrow, Thursday, we've got volatility at 8:30 a.m. Unemployment claims. That is something that we will definitely see volatility on. And then Chicago PMI 945, 10 a.m. pending home sales. Generally, we can see and have seen some relatively high volatility during pending home sales. So, yeah, so I think that today will be tomorrow will be one that also has good volatility. Try to be positioned well before then. Otherwise, wait until the news to come out and then trade where it takes you. So, let's take a look at the charts and review from yesterday to today. So, or rather, today's price action in general. And actually, let's take a larger view instead of the quadrants view. So, we saw that this short-term high, 16,173, got taken. And if you recall, I had mentioned an hourly level. That was way back here. Oops, I moved this a little bit too far. There you go. So there's an hourly short-term high up here that I also denoted at 161.94. Both of those hit, and we headed downwards after that. Taking such a large daily short-term high was kind of understandable. I wish I had that line drawn out because that would have been a perfect segue into a nice solid short at that time. I think that short would have been a little bit after open. So let's see if I can move this so that I can see it on my charts. So I'll bring in some other charts in a moment, but for the time being, daily, yesterday we had this inside bar, so we knew that one of these sides would be taken out, likely. Volatility ended up having a spike above. You saw that play price action all the way up until 8:30 a.m. Called it perfectly, but held through that news, and that was my mistake because I got stopped out there before it ended up going to terminus where I wanted it to go. So that being said, we did see that price took out this short-term high and came back down, rejected immediately. It didn't quite get to this monthly premium SIBI high, and it's already rejected quite a bit. So where are we looking tomorrow? Well, from a daily perspective, if we stay below the consequent encroachment of this daily wick here, so this here, 161.31.25, we might as well load it right now. We're going to put it daily, and then we're going to make it a dashed line. So I'm going to mark this as a daily upwick consequent encroachment untouched, because we haven't gotten there yet. If price goes up to it and stays below it, so like trades up to that daily volume imbalance once more and rejects, well, we can kind of treat that as evidence that we are heading a little bit lower to maybe tackle these short-term lows here, and possibly. But for the time being, what we like to do is grade this and see where we end up getting. So I'm not going to leave this on the chart. It's a little bit busy. But for the time being on the daily chart, that's what we're looking for tomorrow, is whether or not it respects this daily volume imbalance, or if it breaks through and heads towards this monthly level here. So today, as you can see, we traded almost back to the new week opening gap. So this week, very difficult trading, no real direction. We've had any major highs have been sold off pretty deeply. So that is something that we are watching very closely, because what that generally means to me is that at the end of a nice run, if we start to see evidence of institutions coming in and selling, well, if that's the case, then I kind of do see that we start to see hedging towards a sell model. So even E-mini S&P ended up hitting, so the high, there's a short-term high of 4597. And let me bring this chart over here so that you can see. So on E-mini, even today, we hit exactly that level. So we have created a high of 4597 back in September. Now we have reached that same high in the end of November. So E-mini hit that same high, whereas NASDAQ has not yet taken out that short-term high. This is going to be interesting, because if we seek this, there was I forget who was on the chat today, but there's a concept called SMT divergence, and because we saw E-mini go up there and we did not see NASDAQ get up there, there's a couple of things that could happen. So we want to take a look one more at the Dow. So on the Dow, we also did end up taking out their short-term high back in September. Yeah. Yep. So we definitely took out the high in September for Dow. We haven't, we made exactly equal highs in E-mini, and we actually haven't created, or rather we've actually gone well above that September high on NASDAQ. Sorry, my bad there. So right now we have NASDAQ and Dow, which see a high and a higher high, and then we have S&P that barely touched the high on the September 1st wicks. So that's something that I'm watching closely to see if E-mini busts up above that. If so, then we could have continuation to the upside. If not, and we start to see E-mini dropping precipitously, then we can kind of treat that as a potential smart money reversal. So we can go more on that in another time, but let's go down to the hourly chart and take a look at today's price action. Okay, so today's price action, right? We let Asia and London go, came in around 7 a.m., and then started seeing price head upwards. We actually played this whole range all the way up here, up until the point where 8:30 hit, and once 8:30 hit, we got stopped out. So key levels here, these were previous short-term highs, right? So this was a local short-term high, and this was September 1st short-term high. So having taken out two key levels and not reaching the monthly, I was hoping we would reach the monthly there, but with this big of a rundown, it was difficult to think that we were going to go any higher today. I kept the trend in mind that we have been trending to the upside. I do keep that in mind, but I'm also cognizant that it was consolidating. So I knew it was likely to aim for these short-term lows, maybe this one and this fair value gap, which it did end up respecting for the most part. So longs definitely could have made some money, but the money was made on the shorts at 10 o'clock in the morning. So we still haven't created a lower low, a true daily lower low. Let me go back to the daily to illustrate this. So we've been creating higher lows, higher highs, right? So on this kind of chart, we see that we created short-term low here, higher high, short-term low here, and now this is looking to become a higher high even. So we need to see if we start to see price move below the new week opening gap and trade down below this short-term low, then we can kind of treat that as a market structure shift. Now it could still come back up here and consolidate, but we can start to leg into shorts and look for shorts in that case for a market maker sell model back through to liquidity to the downside here. So that's what I'm thinking, is we're starting to layer in institutions where they're selling off a lot of their positions on the way up, and they're starting to hedge their positions and get out of them. So let's go down to the 15-minute. So today's price action. So here's the 15-minute, right? We saw that through Asia in London at 3 o'clock, we took out this short-term low right here. That's buy-side liquidity, or sorry, sell-side liquidity. We'll take a look at that on a lower time frame. Just know for now that this is a sell-side liquidity here. We took that out and then headed upwards, right? We see that this fair value gap was left open to be referred to at a later point in time, but bullish order block respected, bullish order block respected here, respected here, respected here. Price moves up, continues, treats this as we've only traded one way through this volume imbalance. And keep in mind, remember I mentioned at the beginning of today's session that this volume imbalance, we have not done anything. We've on the daily, we haven't traded up through it yet. So let me go back to the daily to showcase this. Anas El Alami, hello. Good to see you. Glad to have you here. So remember, on the daily, again, we've only had barely blips of price action go through this volume imbalance. So we still haven't seen a close above this volume imbalance. So we still merit, we can keep this as a valid volume imbalance, and we can kind of see if price is willing to trade back up to here. If it does trade up to here, we would like to see it close somewhere in here and then reject the next day. So we're keeping that in mind. On the 15-minute, it does look like we've traded up and through it. That's fine. But once we hit this key level here, we see that there's a precipitous drop. So we, in the morning, were looking to see if we could get up to this breaker. However, what I failed to notice here was, and I failed to point this out, and this is something that I am journaling today. So this item here, we have a bearish order block that we traded to and instantly rejected. So as you can see here, we traded to this bearish order block. We did not end up heading up to these. Let me remove some of these here. We did not end up trading up to some of these bearish breakers. I think we will have to look on a lower time frame. I actually don't see, even on the lower time frames. Yeah, I don't see on the lower time frames that we traded up to that breaker at all. We just left it. We pretty much just left it in the dust. So we can go to lower time frames and look at that in a moment, but we were hoping that we would trade up a little bit higher. But it seems like this bearish order block, we take that, and instantly once we take that bearish order block, we see price end up heading downwards. And we definitely had some indications that it was heading downwards, and there were definitely some entries where we could have gone down, and I'll point those out in a moment. But at least we can see this fair value gap. We see price head back up into it. What I want to do here is show you something here. And we're going to use a swing grading template that I have. Probably easier to do it this way. So we didn't even get to the 25% mark before we ended up dropping. So this bearish order block really was the most powerful thing to look for. We hadn't traded, we had traded to it before, but just the top of that. And this used to be a bullish order block, right? But now we could kind of treat this and invert this once we have displacement through it. So that is something that I'll note for future reference. This bearish, or rather this down close candle, we can call it here. We kind of treat it as a inversion, what do you call it? Inverted PD array when we see displacement down below it. All of these should act as resistance if they acted as support early on in a market maker buy side of the model, of the market maker sell model, the buy side of that. So we should see this treated, we should have seen this treated as if it was the opposite side, and we should have seen it match up there. We were too pigeonholed, tunnel visioned into this breaker to see. We knew it was destined to potentially go down, but we failed to see this linkage here. And what ends up happening is it ends up taking us all the way back down to terminus. The lows of London were the other areas of liquidity to be targeted. So we missed that whole run. We also had morning meetings, so it was impossible for us to hit that. We caught portions of it though. So we'll take a look at these on a lower time frame in a moment, but we do see that there's this 15-minute fair value gap. We sold off from that sell side imbalance and headed towards, there was only one area of distribution, and it headed down to terminus immediately after that. So that is about it on the 15-minute. Today was a very heavy short day. I think we could have known that because we saw a high, low, higher high, and then we saw major displacement. This is not a simple candle. This is a very, very big set of candles here. And we'll look at this on the 5-minute to get a little bit more in tune with the market price action. Let me see, there's a chat. I have a question. You have any idea how we can identify if we're going to trend medium term, like PN daily time frame analysis? What is PN daily? You mean PM? Oh, PM session? Is that what you're talking about? I'm not sure. So define what you mean by medium term, and then maybe I can answer your question a little bit better there. So down to the 5-minute, right? If you recall, during the daytime, we had started to, when we had started to have that run up in the morning, I think that was at around 7:45. We were trading around 7:45, right around here, right as we entered the top of this area. We had price action pretty much set from about 16,134 all the way up until it hit around 1660 before it dropped down really quickly and stopped us out. I mean, on daily, oh, I see. If we're gonna trend medium term on the daily time frame, do you have any idea how we can identify if we're gonna trend? So yes, absolutely. There are definitely some ways to identify that we're gonna trend on the daily time frame. What that means is you'll have to go to a weekly chart and you have to see, hey, do we see a clear draw on liquidity? If so, then we can say, okay, well, is there a confluence on the weekly level? Okay, we do. Then let's go down to the daily and let's see if we've taken out a short-term low on the daily chart. And then you look for those short-term lows to be taken. So to give you an example, here's a weekly chart of NASDAQ, right? Let me remove some of the drawing objects for now. So here's a weekly chart of NASDAQ, right? Back in January, we saw that this intermediate term low, we kept on seeing short-term lows be made and more other intermediate term lows be made as well. These are all short-term lows, but we saw higher lows being made here. So once we saw this volatility, we saw the displacement to the upside above this weekly level. That indicates to us, okay, once we get down into a retracement for the weekly chart, we can expect us to trend at the very least up to this first area of liquidity. That's on the weekly. So once you know that, then you can drop down into the daily charts and then you can get a sense of like whether or not the dailies are gonna trend or not. So hopefully that helps. That's a whole another lesson though, is identifying higher time frame to lower time frame, making sure we can analyze that. So too much for today's review, unfortunately. Okay, so we're back to the 5-minute on NASDAQ. So on the 5-minute, this was an impossible take unless you are used to the turtle soup concept. It would have been very, very difficult for you to... Oh, what's going on here? Hold on. There we go. So unless you were very used to the turtle soup type play, that model, this would have been very, very difficult for 2022 model. I mean, the 2022 model is here. You can clearly see this here. It's definitely still here. And you can see that on the displacement candle, this was the displacement candle on the 5-minute, right? So for those using the 2022 model, this is what we were looking for. We were looking for a short-term high, a Judas swing above there, right? Short-term low being violated with a candle. And we can then take this same concept and swing grade this fair value gap. We see we came up to nearly the 25% mark and then rejected there. We also do see that there were previous bullish order blocks now turned bearish order blocks that we traded up to and rejected. So this is an indication that we should have seen and paid more attention to over the course of today's price action. And yeah, thank you. Yeah, you're welcome, Anas. Yeah, we can talk more too. That's a really common question that many people are wondering about. So yeah, for the 2022 model, this was our fair value gap. If we are to take this swing high, we'll take from the candle bodies to the swing low. Let me change this once more to my swing projection template. Okay, so we see that price has come up maybe 20 or 30% maximum, right? We were expecting us to go all the way up in a discount, but when this started to drop and reject this bearish order block, or rather this bullish order block turn bearish, I think that's what we had to look for, the true mitigation block here instead of the bearish order block. I think I had pointed this out earlier, but I was not fast enough on the draw to hit that. So on market maker days where we see really big displacement, we know that a second leg is highly likely to occur if there's a first distribution here. So I think low risk short would have been right around here. So let's go down to the 1 minute though and see what that looks like on the 1 minute. Okay. So here we are on the 1 minute. So this is what you would have seen if you have a 1 minute chart open. You would have seen us take out this buy side liquidity. You would have seen us spike up, come down, spike up again, not take out buy side, have a higher low, make a lower low or lower high, lower low, lower high, and then we see a spike down. So here we would have anticipated, okay, well, is the 2022 model going to give me anything? No. Then let me see if it heads down below here. Okay, great. It headed down below here. Is the 2022 model going to give me anything? Well, ideally this would have been the nice, like, you know, fair value gap, but as you can see here, it would not have filled and price would have gone away from us at that time. Now, this entry here would have been quite difficult because remember, at the time, this is all you see. So you see a short-term high, violated displacement higher, right? But you see it struggling around that bullish order block. You see it struggling there. So I would have attempted a entry here. In the second time that it came up, and I actually think I ended up shorting there, just shorting a little bit too, short a little bit too late on that downturn there, or maybe too early, because I ended up shorting like right at that low here. Price ends up coming back up a little bit and ends up continuing back down below this fair value gap, but ends up popping back up at some point too. So I think at that time I also had missed some shorts there at that 1 minute mark. I think I was looking at a lower time frame and I missed this. So that being said, these entries sometimes won't give us these fair value gap entries sometimes won't give us the whole picture, and we're gonna need to take a look and see where there are other potential risky but probable entries. When that happens, when price goes really far away from us, we want to look for some semblance of a retracement before we go back, and taking of these relative equal highs, seeing displacement below that could have been a next entry. Good evening, GE, Phoenix, AVS, good to see you. Yanevo, stop loss will be too big, IMO, for the 10 a.m. move using 2022 model. Yeah, the stop loss would have been way too big of a range, because to Yanevo's point, in 2022 model, you typically are looking to take the displacement high of that whole fair value gap. That's like 70 points there. So I'm thinking that if you were going to try to enter around there, it would have had to have been it would have been a tough entry for sure. So I think today was just in general slightly tougher. With this giant move up, who could have imagined that at 10 a.m. we would have seen this massive drop as well? So some people caught it short though, and I kudos those that did, but we certainly did end up completing a market maker sell model where we had the rise in London, and then we sold off in New York and London close. So price after that was really quite difficult. Once you completed that model, headed back down to this hourly fair value gap. I saw a displacement here above, and let me see, did I end up taking that? I ended up taking a buy around that area. So there was some movement up here, came down, took out some stops, continued higher, grinding higher. And around that point is where I was on a lower time frame, so I had taken some longs here and ended up getting out around, I think, this high. So I took some longs around here and getting out of my longs around this red line here. That's a monthly rejection block there. Phoenix AVS, I was really under the impression that the rally would go because it was early. Plus, once I saw those huge candles, yeah, I know. Psychology is a bitch, isn't it? So the concept of a Judas swing was definitely there. I think that we had to keep in mind that this whole week we have been consolidating, right? So if we look at price this whole week, it's just been up, down, back up, down again. So it's tough to get a read on what the market wants to do. And what that means to me is that I'm starting to see institutions leg into hedges that markets may make their way to the downside. So they're getting in some of their sells early on, layering them in, and they're looking for catalysts that can take us down. That's my initial thought. But, let's see. I mean, my draw on liquidity is still been that weekly gap that we have below, but I mean, we have to get below our new week opening gap first and close below there for us to have a shot at aiming for that. So If you don't know what I'm talking about, that weekly imbalance, go back to the weekly. So let's look at this price. This is this week's current price action. And we have this imbalance below us that we formed 2 weeks ago. So I was thinking that we might see rejections for here. Maybe some consolidation around this area, but ultimately I want us to head back down to this fair value gap on the weekly. That was my draw at the beginning of the week. We have since come up, rejected a lot of really key levels, and then have started to make our way back down. So yeah, I think that's it for today's analysis. It certainly was very heavy today, but to be fair, we have indeed still been in consolidation. So you can ask on it anytime. Yeah, you can ask anytime, Phoenix. Don't worry about it. I think I'm pretty much done with today's review. We see the sell side that we were aiming for, and price pretty much just went up, went down, went up to buy side, went down to sell side, and it was as simple as that. That really, you can't complicate it much more than that, right? So, and right now in Asia, we see some high and lows being formed. The highs are being attacked right this moment, but we see consolidation. I would wait tomorrow for the news to come out for unemployment claims. Maybe could trade from 7 to 8 and then see if there's a slowdown come 8:30. I would probably trade that, get out of the trade before news, and then trade the news afterwards. See what gets created in during the news. So for tomorrow, targets on our hourly. We still have not created a lower low. So if we are going to continue expansion on this week to the upside, I think we could head back up to this volume imbalance, maybe play around there a little bit more. If there's a large amount of buying to be done, I think we could potentially head back up to target this short-term high now on the hourly. If and only if we can get above this daily volume imbalance here. Yanevo, your session indicators are for Forex kill zones and not indices kill zones. I think my session indicators go for... Yeah, I think, let me check. See. Yeah, I use 1 a.m. to 5 a.m. I don't use the 2 o'clock to 5 a.m. I use the London close, 10 a.m. to 12 p.m. New York session, I start my New York session at 7 a.m. and I take it all the way up to 9:30 a.m. open, just because I want to see a clear difference at 9:30 a.m. And of course, Asia, I run from 8 o'clock p.m. to 12 o'clock a.m. And the reason why I do that, London, it doesn't affect me as much, but I certainly do start to see stuff happen around 1 o'clock in the morning. You start to see the beginnings of moves, rather, around that time. So yeah, good question. So for tomorrow, I'm still not seeing us. We didn't get down to the midweek opening gap entirely. So if we are heavy bearish, we will get to that, go through it, come back up to the new week opening gap, treat it as an inversion fair value gap, and then head down towards sell side liquidity here. If we are ultimately bearish and this is the high of the week. Now remember, there's a 70% chance that the lower high of the week has been established come Wednesday. So we still are seeing that this week is green. This week is stronger to the buy side. So we need to see if this continues to be respected over the course of Asia and London, and then see if we see continued price action to the upside, because we have now taken out a whole bunch of sell stops. There are more down here, but keep in mind, we haven't been creating many run-on sell stops, right? We have some on some sessions, but once we make a market move above, we aren't seeing too much. We get this one taken out by this. We have this taken out by this taken out by this. There's always some sort of run-on stops before we start moving heavily. And today was no exception. Today was no exception, being that Asia low, London created a lower low, took out stops there, and started to begin the rise during London kill zone. Let's see. LP trades, if price is truly fractal, and the same on every time frame. Sessions should be the same. Kill zone is all preference. Yeah, absolutely. I agree, LP trades. Kill zones are preference. It just depends on what you want to see on your charts. I personally enjoy the time zones. You'll see from time to time people come in and they say these charts are ugly, they are too busy. Well, I like having those specific times that I have on my charts, because that gives me a quick visual indicator that, hey, something is about to happen. Watch out for it. Have you ever tried IPTA using hourly candles, 24, 48, 72 look back? Actually, no. You can kind of tell. So for those that don't know what he's talking about, there is a IPTA data range, 20, 40, 60-day lookbacks that we take a look at to look where price could potentially reach to. And so far, we have almost reached to the short-term high that's just outside the 60-day IPTA data range. What I am curious about is, I'm curious to see if we will see a continuation of a quarterly shift to the upside here or not. I don't know. Probably need a little bit more data. But that is a whole nother set of lessons in ICT's repertoire, and it is so tough to learn that one well that is going to be a whole nother session. But I am curious about this using IPTA using hourly candles with a 1 day, 2 day, 3 day look back. What would you look back? You're just looking back each day on the hourly candles? So like, are you going from like midnight to midnight, or 7 a.m. to 7 a.m. one day and the other? Let me know, LP trades. We're missing one trader. Like. Oh, appreciate that, Phoenix. Yeah, I mean, if you're here, it doesn't really do much for you can like or not like the stream. I'm still here. I'm still gonna use YouTube to study. I'm looking at the charts, studying, writing this to my brain so that I can apply it tomorrow. So I appreciate your likes, but you don't have to. Yeah. Well, yeah, LP trades. I'm confused what you mean using IPTA, using hourly candles though. You saying use 20, 40, and 60 candles on the hourly? So each candle you count back 20. I certainly do look for the draws on liquidity within the past few days. Yes, I do. But your I'm a little confused with your use of IPTA on hourly candles, because typically IPTA, we're looking back 20 days, which is like 1 month, 40 days, which is 2 months, and 60 days, which is 3 months, right? I guess if you were to do that for the hourly, I suppose you have 24 hours in any given day, 23 hours, sorry, 23 hours in any given day. Yeah. Yeah, I would say I look for short-term highs, short-term lows, and relative equal highs and relative equal lows within that time frame for sure. Yeah. Yes, correct. 20, 40, 60 is 1 month, 2 month, 3 month. Yep. What's up, The Rock? So hourly is a 24 hour is 1 day instead of 20 days equaling 1 month. Okay, I see. So 24 hourly candles and seeking 24, 48, and 72. Yeah. That's I do that, but I don't count out, like, the hourly candles themselves, midnight to midnight. I kind of do that. I look for what has transpired in London and Asia each morning. I look back throughout the week to see where relative equal highs have been throughout the week, especially if we've been in consolidation, and draw those out over time. So yeah, that's what these levels were. We definitely look back more than 3 days, of course, but this one over here, this 16,194, this one was a tricky one because this was back way back in, I don't know, this was back in July that we had this short-term high. So we look back quite a bit. I think it's worthwhile looking back quite a bit, which is important where you have something like Ninja that gives you data look back. I think it's really important that you have that. So good questions though. Good concepts as well. For anyone who's new, what LP Trades is trying to communicate to you is that he's looking back these past 24, 48, and 72 hours and looking to see where the major short-term highs, where the major draws on liquidity are, and then using that to trade. LP Trades is studying the market structure shift using Wednesday. So we have today, yesterday, let's see, I guess today is Wednesday, but Wednesday's 11 a.m. candle. Looking back on 1800. Okay. So right at that beginning of the new day. Okay, I see. Interesting. Yeah. This here, I do see that as a temporary market structure shift. We see this short-term low got taken out by this candle, right? And even this 7 a.m. candle, this short-term low got taken out by the 11 a.m. candle here. That's what he's referring to with that market structure shift. It was tough for me to take that short because my brain was still in overall bullish mode. So I missed that major short. I missed that major short, but I did end up taking a few shorts throughout the rest of the day. I think once we got down into this hourly buy-side imbalance, I knew that it was going to be a little bit tougher for shorts to get below that because of the nature of how price has been booking and not creating short-term lows. more lower short-term lows. They were creating higher short-term lows. So this is no different. On the hourly, it might look like we've created some, but I mean, if let's take a look at the 4-hour chart, for example. So on the 4-hour chart, let's see if we can blow this up a little bit. Uh-oh, no, that's not what I wanted to do. What was that line? I think I just moved one of my IPTA range lines on accident. Oh well. So as you can see on the 4-hour chart, you see short-term low. Well, if I can get this to work. Higher, high, higher, low, higher, high, higher short-term low, higher, high, higher, low. This doesn't really count here. I would consider this to be a higher high. And then we still see higher lows in general. So until we break those, this is what we need to break. If we want to really truly think that, hey, we are going to the downside, I think right this moment we need to break through these short-term lows. Those translate to daily lows as well. As I mentioned earlier, we have 2 daily short-term lows currently. One is here. The next one's here. We need to break below this one if we're going to truly consider it to be a market structure shift, in my opinion. I'm not going to trust it until we see a break below there. And then I will look for shorts heavily. Cool. So yeah, any questions? I think we're done for the day. Bias is still, for me, I'm still within this trend. I'm still looking for key areas too long until we see us break below new week opening gap. Then I'm going to really, really be thinking short and looking for shorts to tackle these relative equal lows down here. How do you do the spot tool? The spot tool, what's that? Oh, you mean this thing? This where I focus you into a very specific point in the chart. That one I just hit control on my computer and I'm able to highlight specific areas. I don't know if that's a Windows laptop thing or if that's a OBS thing. I'm not sure, but I just found it on accident one day and I'm like, oh, this is kind of cool. So I hit control twice. So I'm not using a Mac. I don't know what it would be like for MacBooks. So unfortunately I can't help you there. Yeah. So yeah, I hit control twice. So hope that helps you, LP Trades. Cool. Let me see if there's any other questions. Phoenix, let's see, missing one trader, yeah. What price is that? What price is that? Phoenix, what do you mean what price is that? Nice, you did it. LP Trades, you are welcome. Happy to help anytime. Phoenix AVS, what do you mean by what price is that? I was just using the tool to highlight something. I don't think I had any importance on the... I was just showing LP Trades this tool here where you can highlight a specific area. The low... You're talking about today's low at 1600, the hourly candle there? Or are you talking about this relative equal low? And this one? 15,938. $9.45. This is 15,945. We're just gonna say short-term low. Relative equal lows, actually. We'll mark that. Oh, yeah. It's these two here. Yep. So these are so close to each other that if we break below new week opening gap, and we break below these two, man, that's what I'm looking for us to see a truly daily market structure shift to the downside. I would anticipate that we would take out this short-term low here, and then, of course, end up making our way downtown to this weekly premium BISI. So we'll see if we can do that this week or not. That would be wild if we can, but we could see more consolidation, and we could still see, keep in mind, we haven't made that lower low yet, so we've still been making higher lows. So this could very well continue higher and higher, and eventually, if we look at the daily, eventually, we might even end up taking out this previous monthly short-term high, right? Let's give us a little bit more data. Now, keep in mind that we do have a lot higher highs much further back in 2021. I'm not saying we're gonna head up to those, but I do see that we have this short-term high here in July that we could very well so head to, because S&P has gotten to theirs, their peak, or actually, did S&P get there? Let me check. Keep getting confused here. Yes, so they got to the second peak, but they haven't made it to the one that's super far back here as of what is this? 1/1/2022. So this was at 7/19/2023. 7. Let me find the day here. Give me 1 second here. I need a little more data. Okay, so July 2023. Okay, so ES has not hit the July 18th high yet. It just hit the August 31st high. So this would be this high up here. NASDAQ's completely blown that out, but E-mini has barely just gotten to this level. So we need to see how price is going there. Let's see, got it. 15,947 is Monday's open. What price is that on the BISI? Let's see. So Monday's open. You're talking about this buy side imbalance, or which one are you talking about? You're talking about daily imbalance. Hey Michael, good to see you, brother. Good evening, glad to have you here. I can actually remove some of these now. Low BISI. So this one or this one down here. So this one goes from 15.860 down to 15.847. This one down here. Oh, the even lower one, the weekly one? This one here? So here's a weekly BISI. 15.837 down to 15.616.25. South Fair. Yeah. So that's the weekly level. You can see that if you go onto your weekly chart, which I would recommend for everybody to do. So yeah. So I have that on my charts waiting. It's waiting for us to see a market structure shift. And then if we head lower, those are some of the key levels which I would start to watch for, right? If we head lower, though, is the key. Because right now, we bounced off of a bullish order block here on the hourly. You can kind of see that here. So this bullish order block here, we bounced off of that today and are currently heading a little bit higher in Asia. Slightly. So, well, I think we need to see how Asia and London play out. If we see that London begins to consolidate and then head up higher, consolidates a little bit, then we very much we want to see if it gets all the way up to the daily volume imbalance already when we open New York tomorrow, or if we potentially can head higher. Without seeing lower lows, I am inclined to still keep it on the buy side, but with today's sell-off, I'm starting to see these very large sell-offs during this consolidation, and that means, to me, that there is currently very large institutions who are distributing some of their longs now. So, I'm just gonna try to, this week is particularly weird one. We're still in the middle of consolidation, so have to be quite nimble. I think that's it for tonight, though. I need to go drink some water, say good night to the wife, and we will catch up bright and early tomorrow morning. I don't think I have nearly as much, but I do need to be out at noon, and I will not be here trading in the afternoon because I need to take my wife to the airport. So I'll be trading in the morning session only, and then you'll be on your own come noon or past 11 o'clock a.m., 11:30 a.m. So 15.954, maybe. Yeah, 15.954 could be a good little target. If it can get down there, of course. Has to close below this new week opening gap, though, if we're going to head lower for Friday. Okay, that's it for today. I hope everyone had a good time. Hopefully this was helpful, and I don't know how many people are on, but whoever has been on, thank you very much. It's always good to have you here. I love the questions. I love all the discussion here. I think this helps me, and hopefully this type of chart reading helps you as well prepare for tomorrow. So get some rest, eat some good food, drink some water, and get to sleep, because we need sleep if we're going to be able to perform well tomorrow. Okay? Have a great evening, everybody. Oops. Knocked my microphone down. Have a great evening, everybody, and we will catch up more tomorrow. Take care. See ya.